Good morning, traders and investors. Are you guys ready for pre-market prep? Today, we got a great show for you guys. We're going to talk some more spin-offs because it seems like it's spin-off week. Then we'll get into the disaster stock of the day. We'll also take a look at a major upgrade downgrades out in the market, especially that one on Apple today. You can't miss that. We'll talk a little bit about on the Swiss Performance Sportswear having an investor day today, Palantir partnership. And of course, we got Tommy Lackey, the person that gave it to us best. At least I feel that the first half of the year would be strong. What's going on in this second half hasn't been that strong. Of course, you guys saw the takedown yesterday. Will we have a Max Payne trade that can get to the bullish side today? Find out right here on Pre-Market Prep. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, traders, let's get to the action. Let's take a look at what's going on here. I can take a look at the SPY. You guys can see starting to bounce back, and we'll talk all about that, as especially it's coming off of the TLT. We'll get into that action. You guys can see with USO oil coming down. I saw WTI, which is more my preferred, down towards around 87.54. The bottom range being around 87.32. Days range to the high end, 89. Can we get back to 90? OPEC meeting going on right now. When I get an update on that, I will definitely go to it, guys. Gold, kind of look at this daily chart. You would think that in this environment, gold could get a lift. Definitely not getting a lift there. Silver, neither. We'll see what happens on that situation. But let's go back to the SPY. Let's go back to the TLT, and let's bring on my man, Dennis Dick. How are we doing today, Dennis?
Doing good. Little bounce. Nice to see a bounce because we come in here and it seems like we bounce overnight and then we give it back a little opposite last night because we were down most of the night, but then we rally it back. So pull the rug out from under that trade.
Yeah, yesterday was a pretty tough day, right? I mean, it was a complete takedown. Of course, on Monday, we were kind of having big tech at least hold the market up. All the other sectors kind of in the red. Yesterday, finally, we started seeing tech actually take the hit and everything started to drop. What did you see out there, Dennis?
Yeah, well, that was it. It was take no prisoners. Let's start selling it all off. I mean, we've been forgiving, obviously, the companies, and we talked about companies that have a lot of debt have been hammered. Companies that don't have a lot of debt have been holding up a little bit better, and mega cap tech has been holding up really well. Yesterday was not the day for that. They sold everything off yesterday. So their bears eventually coming. Like Joel was saying, he gave me a call. He's like, they're coming for the generals. And that's what they were doing.
Yeah.
They were coming for the generals yesterday. Nvidia, I know you had a nice trade in Nvidia there on live trading, I believe, Money Mitch.
Yeah.
Stock reversed, but a double top. And yesterday, 451. Talk about your trade.
Yeah, I was looking for a reversal off that 450 area. I've been seeing it at such a vital spot. Last time when we were coming back through the 450s, we were coming up to this 460 on the right-hand side right here. You guys can see it. And I was thinking, okay, would that lead us back to the 500 rally? Then as we come back right now, we were going back towards that 450. But I started realizing how kind of pesky that area is being right now. So if we can't really hold above that, I think the bulls are going to be on a fight right now to get it back above that 450. Above 450s, yeah, you could. Why not go back to 480s, 500? It's in reach.
Yeah.
But if we can't get above that 450 and we take out this low, the 410 low, this 409.80, that's when really we're going to start seeing kind of the Nvidia traders let go. And Nvidia's overall hasn't really pulled back. I mean, there's a lot of stocks that have pulled back. Think about how much Nvidia has actually pulled back from the highs. We're talking 23.6, the first fib retracement. So it's a small pullback. It's still hanging in there. What do you think about this, Dennis?
I mean, they're all hanging in there. We have a lot of stocks still hanging in there. We've had stocks get killed, and we've had stocks hanging in there. Nothing really rallying now. We're not seeing a lot of stocks make new 52-week highs. So, it's not like we've had, this relentless rally and stuff, but stuff hanging in there. Mega cap tech hanging in there. Maybe like for the good reasons that we've talked about already here, Mitch, that, a lot of these companies don't have a lot of debt. So maybe it's somewhat understandable. I just don't like the valuations on these things. And I think if the consumer starts to get more strapped, eventually demand's going to start to fall. And I don't know if this market's ready to handle Apple missing sales. I don't know if this market's ready to handle Microsoft not guiding way up. I don't know if this market's, looking at Nvidia and saying, wow, if you're not showing us, 40% revenue growth, quarter over quarter here, we're not going to be in. Think about the last 2 quarters in Nvidia. It's a little bit of is this as good as it gets? You've got to ask yourself that. So we get a relief pop this morning. The only thing that really matters right now, Nvidia was your leader for 3 months on the AI boom. Remember we said, even if you're not trading Nvidia, have it on your screen. It is leading all tech. What is leading all stocks, not just tech right now, all stocks, is the TLT. If you bring up the chart from overnight chart on the TLT, the markets were down all night. TLT was down all night. Around, what time is that green candle there, Mitch? Maybe you can grab it. 7 o'clock, 7:15. TLT started to catch a bid.
Look at that. Look, I love how this
Telling
will
you,
show us.
man.
You see that yellow line?
Look at that. Look at those
the yellow line,
candles.
how it moves.
Yep.
There, we were on a downturn on the SPY, but that's right when we started turning in the TLT. This first green
TLT went green candle before the SPY. Look at it. The green candle came right before the SPY went green. So that's what your leadership is right now. It is all about the TLT. It is all about bonds. I've said before, you cannot get bullish stocks until we start to see the TLT rally. Well, at least in the last hour, we have a step in the right direction. TLT has rallied $1 from the lows in the last hour. So we have a step in the right direction. Is it sustainable? I don't know. But I'll tell you, it's hard to be bullish stocks if TLT is going to continue going down because the alternative is just too high. I mean, when you start getting treasuries approaching 5-6% people are talking about there. I mean, Tina, dead and buried, and that's what's killed the staples, and it's killed so many other stocks. But XLU started to turn a little bit yesterday. I mean, maybe seller exhaustion because we made a new low, but then we actually closed higher there. So could be some seller exhaustion there. They've just been massacred. I mean, it's not every week that XLU falls 10% in a week. That's just, unheard of almost, unless you're in like a financial crisis. So I think it's seller exhaustion there. I think we are due for a little bit of a bounce, maybe on some of this really beaten up stuff here. But again, are we out of the woods? Keep an eye on that TLT. A dollar rally is a nice start, but we're definitely not out of the woods.
So my question of the day, and I want to start doing this more and more. The question of the day today is the Max Payne trade now a bounce?
Oh man, I don't know. Because
it's a hard
question.
Some
people,
it's a hard question.
Social media platform and they say, "Oh, I see a lot of bearishness. It's all bears and it's extreme fear." But then you look and I see a lot of bullishness too. Every analyst that comes on CNBC, I still hear calls for the soft landing. So I think it's still. I don't think we are at extreme fear. I know the CNN gauge says extreme fear. I challenge that. I don't know how they calculate that. Maybe they tell us how they calculate it, but I don't think they calculate it very well because it does not feel like extreme fear. The last couple of days started to feel more fear. Like when they start selling everything, that starts showing you extreme fear. When you start to see the VIX get over 20, which we did yesterday, that starts showing you extreme fear. But I mean, we're on the way to extreme fear, but I just don't think we're there yet. And again, you got to keep looking at valuation. You've got to look at, the metrics here and just say that maybe there's could be potentially some more downside here. So I think if you're all cash, if you're nibbling into some stocks here, I won't argue with you. I've been nibbling into some bonds, you know that. But I think if you're sitting, 100% invested and you're on margin and you're puking, your guts out looking at your portfolio the last couple of days, it means you get too much stock. So I think it's an individual basis here that if you're really heavy long, I'd be selling into restraint. Because I think there's more pain ahead.
I'm going to wrap up the current environment here because I think it's also important to keep up with that. Right now, we're mentioning a couple of things, right? We're mentioning the focus has moved on to prolonged interest rates, wage inflation, and all those things that come with it. Labor agreements, debt-focused companies. We saw those solar names continue to get hit. XLU, a small little bounce back yesterday. Bank concerns. We're seeing the banks really struggle out there, and a weakening consumer. Now let's go to a downgrade today in Apple, definitely catching the tape. One of the biggest losers today is going to be Apple on that
Yes.
downgrade. Now the only
Yes.
question is, can they bounce back? Let's take a look at the chart here on Apple. And the downgrade here is from KeyBank, downgrading the tech giant to sector weight from overweight, citing concerns about slowing sales and a high valuation. I know there's someone here that's been talking about a high valuation on Apple.
Ha! Maybe they listen to pre-market prep.
Let's talk a little bit about it. Dennis, what are you seeing here on
It
Apple?
makes no sense to me, the valuation on this thing. Again, you know, guys, if you've listened to the show for the last 3-4 months, I've been talking about Apple and the valuation not making sense. It's taken a long time. Coming back in. Apple at 22 times makes some sense. At 20 times makes maybe a lot of sense. At 28 times, maybe it's down to 27 as the stock comes in. I haven't looked. It was 30 times up at 190. Doesn't make any sense to me. So I think I'm still sitting in the Apple lower camp. I've said I think it's going to 160. I just think there's also issues here with I don't know if I don't think the quarter, I think the quarter will be fine. I don't know if the guidance is going to be great. So that's what I'm concerned about is the forward guidance here. We're going to come into earnings season. We're going to start that basically next week. Apple is until the end of the month, I believe. Do you have a date when Apple reports their money, Mitch? I'll throw you under the bus here. I know you're not prepared for that, but trusty Benzinga Pro. Yeah,
I can handle a bus. I can take it. Let's go ahead. Let's see here. We don't have a confirmed, but the next date that we have is the 26th. So estimated around October 26th.
About 3 weeks. We're about 3 weeks, and that week is always the biggest week for all earnings there. I just slightly worry that expectations are simply too high. And Nvidia was, unbelievable, and we saw what happened to it. So Apple's gotta have a good quarter for the stock to go higher. I just don't know if the market, unless, we sell off significantly before that. Obviously, it's all about expectations going in. We have 3 weeks. I mean, if we were to sell off, down to 160, maybe it doesn't have to have as great of a quarter. But if it's here at 172, 175, I just don't know if they're going to give you the quarter that the market wants. So I'm very concerned with Apple. And you know that.
Yeah, I've called the 50%. I think I need to keep looking for that. I think if I jump in here on the 38.2% retracement, I think I'm jumping in a little bit quick here. And especially, I don't see the plus side of the story coming too soon. Of course, iPhone sales could maybe make a little bit of a jump in the holiday season. But other than that, I don't see them getting the consumer demand that they expect. Maybe in that specific, like let's say Black Friday or Christmas time. But other than that, I don't expect these iPhones selling as much as they normally would in a weakening consumer environment. All right, let's move on to earnings here on Cal-Maine Foods. The eggs, right? In earnings, Cal-Maine Foods badly missing the estimate here in its fiscal first quarter report. The egg producer posted earnings of just 2 cents per share, well below the expectation of 25 cents. Revenues also came in short. Cal-Maine blamed higher feed costs and supply chain issues. The stock is getting shellacked this morning, down over 5%.
Yeah, we're down big. I mean, this was the egg bubble in the stock. Everybody was attracted to the big dividend, which it still is a big dividend. I'm not sure if that's sustainable or not, though. I mean, this stock has given all of it back. So it had the big pop up from 40 to 65 when eggs were going off the board. It felt like a $10 a dozen. And, it's back down to reality. So all those, all those profits are gone here now. Now you're left with, it's a consumer staple that's getting hit here, and people don't think that dividend is sustainable. So that's why stock is down here. You got good support down at 35. It's a long ways down. I don't think I'm buying the dip on this today. ADP coming out here, Money Mitch.
Yeah,
so I just went wide here.
8:15.
Chat, thank
Let's
you
go.
for
I
warning
got
us
you
on
guys.
that.
I have it right above
ADP
here. Estimate is 160,000, prior 177,000. So we'll see what happens here as this comes in. looking to see this actually changes up the market here. I don't expect too much, even though we did get a little bit of a move on yesterday's
Pop a little bit
number.
here on the
All
ADP
right, so
number.
here's ADP. I have 83,000 versus 153,000 estimate. So it looks like even my estimate changed there, but estimate at 153,000. What the number that came in is 89,000. So way low underneath the change there. And so how will that react to the markets? Let's see how the markets are reacting to that. See if we're getting an action
Getting
here.
a little lift here on the ADP number.
I'd go to the 5-minute here to go a little bit closer. I'm not going to go to the 1 because if not, too many people will get too excited. But here's the 5-minute on the left-hand side. You can see we are a little bit of a pop there. I think now the only thing that I would be looking at is like whole dollars below, like 422. Back below that, I'll be a little bit concerned right now. If we can stay above that, especially where we popped at the 7 a.m., which was more the 421 spot on the SPY, staying above that today is going to be a good outlook to see maybe a little bit of a bounce back rental type of trade. That's the way I'd call it, at least for right now. I could see some tech names maybe bouncing. Of course, we're seeing Nvidia starting to come back. We're seeing Microsoft strong this morning. So looking to see if the tech trade can at least get a little bit of a bounce back after yesterday's attempted takedown.
Yeah, it's bouncing big time here. And the lie detector test, which is the TLT, is bouncing as well. So we actually added about another 30, 40 cents on the TLT on this number too. So, I mean, again, keep that up. Even if you don't trade bonds, keep it on your screen. If TLT, and just saying scenario analysis, continues to rally, it probably drags the market up with it. If TLT decides to start rolling over, it probably drags the market with it. It is your leader right now. It's all that the market cares about is the bonds. TLT is a great indicator for that. So keep it on your screen.
Let's go to more of what? Spin-off week, because it feels like it is spin-off week. Let's go to Intel. Intel announcing some news last night, and we got 2 more to talk about. Let's talk about this. Intel is up after announcing plans to spin off its programmable chip division. The company believes the operating that business as an independent unit will help drive growth. What do you think about this, Dennis?
I mean, we're in spinoff season, it seems like. Investors like spinoffs. They like, so, and this is just getting announced there last night. So I don't know if we have all the details on this or if this is just being proposed or what it is. But the stock did pop a buck on it, and we're seeing that. Intel came off right where it should, that 34. We talked about that level. That's kind of where it broke out from when it had the big run to almost $40 a share. Actually, I think it did hit $40. Funny how these, whole numbers work. All the way down 34, put like a triple bottom in there, and then it's starting to climb back up here again. So Intel's has been getting some love. We got to say, that the bulls, as much as the bears are in control on a lot of stocks, the bulls are in control in this stock down at the $25 area quite a while ago here. And it's been trying to charge back. And we've been talking about the rallies in old school tech. We've seen IBM coming back, Cisco coming back, until recently, that is. Obviously, Oracle, maybe put a wrench in those plans because Oracle got hit on their earnings, and that's old school tech as well. But I think we're just in an environment here where Intel, the sentiment towards that stock has turned a little bit. So that actually, as a trading hat, I'd be a buyer of dips on Intel.
And let's not forget, right? They've had a successful spinoff with Mobileye, right? I mean, I would consider this a success. I mean, it hasn't really ripped off, but I mean, how many other stocks that probably have spun off and gone completely lower than their valuation? Now look at Mobileye. It's hung in there, right? I didn't expect this one to hang in there as much as it did, but that just goes to show me that maybe they saw this as a success. So they're seeing that, hey, let's continue splitting the business and looking for growth out there, looking for investors, because of course, Intel has been that kind of, and I got to say, dying brand that is trying to make a comeback. That's the way at least I'd refer to Intel. Let's go to the next spinoff news. LAC, lithium producer, Lithium Americas, has split into 2 companies, Lithium Americas, and you also will have Lithium Americas Argentina. And so both will be trading on the New York Stock Exchange. You guys can look out for them today. One will be trading under LAC, and the other will be trading
I've got LAC
on
gone now.
AC.
So LAAC I don't have any quotes for LAC. So I think we have another, I think we had another change there.
That's what I have right here. And this is, I see what's going on there. So
LAAC, and then there's another
this is what's
stock,
going
but
on. So this is what's
yeah.
going on here. So the key to catch here is going to be the exchange. So they're going on the TSX under LAAC, New York Stock Exchange, LAAC. And then
Yes.
now a New Americas Corp that's only going to be trading on the TSX under LAC. So that's why I still have LAC here. So on TSX is going to be trading under LAC. The New York
On the
Stock
TSX,
Exchange,
it's going to be on LAC. Okay, so
Yep.
New York has no LAC anymore, or does?
Yeah,
LAC
New York does not have LAC anymore. It'll only have LAAC. And I don't even
It's
have
all
it right now.
confusing. Actually, I have LAC going too, though, now. No, I look at my one program, I don't, and the other one I do. All these spinoffs screw stock. I hate spinoffs. It screws stocks up. You got to do all the adjustments. You miss the right adjustment, I mean,
There
and
you
it
go.
makes a complete mess. So I have one system that isn't even looking at LAC, and the other one I have it trading LAC. I have it down to $10.20. So, Money Mitch, I think you're right. I think it actually is over here too. At least it's trading this morning at $10.20 on my one system.
This is what I have. This is what I have, at least straight from the press release. And so this is how they have it now. That Lithium Argentina is the New York Stock Exchange LAAC and also TSX LAAC. And then the classic Lithium Americas Corp is now LAC on TSX.
So confusing.
The key here, Lithium, I don't think is making that move right now. I've talked about it. They need the EV wave to really come.
Lithium not making the move.
Infrastructure needs to happen.
Lithium made a move. Don't kid yourself. Lithium made a move. It's straight down, man. I know. I feel it. These are the two worst stocks in my long-term portfolio. I have ALB in there. It's an epic disaster. And I have LTHM, which I was way up in, and now I'm down in. Epic disaster as well. Yeah. So, I mean, believe me, they made a move. And you know what the move, why it's going down? Because it's all overall auto demand. I mean, just bring it right into this is, you know, you got GM and Ford that got problems here, but I mean, the Tesla numbers were a little bit weak. I mean, they're predicting here that demand is going to go down. So I think it's right. If the consumers stretch, they're not going out and buying new EVs. So there's a concern here. And, you know, Tesla, I keep thinking it's going to reconnect with this at some point in time. It's obviously the big seven doesn't, you know, like it fits the bill of doesn't have a lot of debt compared to some of these other companies that have been getting hit. But you look at this and I just think it's got to reconnect eventually. But man, Tesla's its own stock. It's its own little, you know, it's hard to, you know, obviously value Tesla from fundamentals and stuff because it's always this trade on story. But this lithium story, ice cold.
And I think a big part of this leads us into our next conversation. We'll go to some of these automakers really quickly. Let's go to Honda Motors and Toyota. Honda Motors first, disclosing on Wednesday that it commenced a tender offer for shares of a subsidy, Yoshido. And what is going on here is Honda already owns a 50.4% stake in the company, and they're taking the full stake. The only part that they will be kind of giving off is to an auto parts maker that will buy a majority stake in Yoshido's industry four-wheeler, but they will take the rest. And so that's why you're seeing HMC a little bit down here. But then Toyota coming in with their vehicle sales. This is where it gets a little bit confusing on Toyota's report here. North America reported September 23 U.S. sales of 203,904 vehicles. The U.S. sales were up 13.9% in September. Electrified vehicles sales surged 81.5%. And Toyota saying that by 25, Toyota's 10th plant in North Carolina will begin manufacturing automotive batteries for electric vehicles. And Toyota currently offers 26 electrified options. Now, one thing that I think that's coming into this and why Toyota might be coming down is what's coming in the future earnings, right? Are they expecting to see a consumer slow down? I think that's what at least the price action is definitely telling us.
Yep. I played this stock unbelievably. I bought it at 140 and I sold it at 190. So sometimes you just get absolutely right. I sold this at 190. 10 days ago, I think it was. And,
140 to 190.
yeah, that's, again,
Look
sometimes
at that.
you get them right, but that one I played really
Hey.
well. The whole reason I sold it was it just went up so much, and I'm like, I kept thinking about a slowdown, and this is priced for perfection. I mean, Toyota already getting back, it's getting up near all-time highs, like not far, I guess, all-time high 213, but at 190, it felt like it was a stone throw away. I'm like, I don't feel like it has any business with GM and Ford being down as much as they are, with Toyota being up near all-time highs. Some people were saying the strike was good for Toyota, Honda, Tesla. Again, Gordon Johnson making fantastic points on CNBC saying, hey, you're sitting there looking at, your Tesla, and you're sitting there making $44 an hour, and you're looking at your competitors at GM or your Ford, they're making $66 an hour, and they want 100. Maybe I want to raise too. So I think it's, Toyota's probably in the same boat. I don't know where their numbers are, but I just don't think the strike's good for any auto companies here. I do think consumers going to get stretched. I do think demand for new vehicles is going to drop very quickly. From everything that I talk about, and, we can move away from autos for a second, but talking to my buddy Jeff there yesterday, real estate agent, we're in Canada, different markets in the US, but, it gives you a feel. I'm like, how is it? He's like, it is dead, man. Like, it is dead, the real estate market. He's like, there is no calls, just slow. So, I mean, this is what we're in. It's a completely different environment than we were in 6 months ago or a year ago. So stuff is slowing down. And that's important to just note. Like, I mean, sometimes it's just talking to real people out there, construction crew, talking, the construction crew. Some are busy, some are slow. So, I mean, we're getting to a point here where you're starting to see that stuff slow down a little bit too. And it's got to be the rates, man. It's the interest rates. Like, people look, well, I'm not going to go pay, $1 million for this house because the mortgage rate's too high. I can't afford to do it. So I think, we're getting a situation where interest rates are actually starting to matter.
Yeah, look at this real estate. This is kind of an equally weighted index that I have from TC that I really kind of been paying attention to. I was starting to really point to this on Start Swing Trade of how this has really fallen off a cliff. And in areas where I'm seeing even more falling off a cliff is the area that was of concern a couple of months ago, which was office and what would happen with offices, right? And so look at these office REITs. And look how these are just starting to really decline.
Destroyed.
Look at that. Look at the weekly and how this has come down from 2002. And yeah, it had some pops along the journey, but this has been about a 50% decline in office REITs. And where are you below? Way below the pandemic lows, right? And so that just scares me a little bit that we could be running into some bigger issues. And what is big exposed to office REITs, Dennis? Well, your regional bank action, a lot of them. And so that's why I'm pointing towards the trouble here in what's going on with the regional banks and what could possibly be coming down the line with office like real estate.
Banks have some issues here, and you think, yeah, the higher rate's going to help them. Not when you're lending out to all these people at 2.7, 2.8%.
Look
all
at
these
Bank of
mortgage
America,
books.
new lows.
This was the problem. This is what we started with in March, was the regional bank crisis. All these mortgage books didn't all of a sudden get better. They're getting worse with rates going up like this, Mitch. They're getting worse. All those regional banks that were in trouble back in March are probably in more trouble today. We're just not paying attention to it. Those books, those mortgages that they're all underwater in, like I talk about a bank in Nova Scotia. I talk about this all the time. I am literally got my rental property I have locked up for another year and a half at 1.64%. I am paying BNS 1.64%. I have a GIC, Guaranteed Investment Certificate, at the exact same bank for 5.2%. I'm literally just making 3-point-something%, whatever that adds up to, off of the bank, 3.6% off of the bank on that money. It's unbelievable. I mean, that's not me doing that. They got a lot of money lent out, and it's not just the Canadian banks. The U.S. banks are in way worse shape. The Canadian ones will reset after 5 years. Yeah. Some of these U.S. ones, you think about it, your mortgage is 2.7% or 3% in the U.S. Your bank is losing a lot of money to you right now, a lot of money. This is a problem, a serious problem that is not going away. Look at the Canadian banks. I mean, we're talking about these things going down, making new 2-3 year lows. Bank of Montreal, Bank of Nova Scotia, BNS, I don't own any of these. I actually own Bank of Montreal as a legacy position for my wife worked there, and I'm probably never going to sell it. TD Bank, I mean, it's starting to break down. Looks a little bit better than the others. RY is the biggest one, making new lows. Go to the smaller ones, which you won't have quotes on them here, but like a Laurentian Bank and on the Toronto Stock Exchange, the things have just been getting killed. I mean, they're going to reset. So, I mean, they're actually, if they can hold out for these next few years, maybe be okay. But I'll tell you, who's not going to be okay is a lot of these smaller regional banks that got these long mortgage books for 25 years. I mean, if these rates stay up here, you could run into a full another regional banking crisis. And we haven't even put that on the table as an issue here. That's a major issue.
This is what I'm concerned with. And I've been focusing on the KRE for 2 months now, and I'm going to continue focusing on it because I mentioned that when I started talking about this, was the only thing that was holding us up was that AI bubble. That AI bubble has gone and the hype is gone. There's always the hype moment. That hype moment is gone.
Yes.
So now it's going to be actual revenue. Like if you have actual revenue, yes, we'll give you the love, but we're not going to give you love if you just mention products in AI. Like let's say today, there's one that's giving us a partnership in AI. Let's talk a little bit about that. Let's go to Palantir here as we continue going on the day. Palantir here with a partnership. So let us know in the chat, what do you guys think about this partnership here with Palantir as they're collaborating with PwC to accelerate operational transformation. The collaboration will combine Palantir's latest AI capabilities and PwC's industry experience to help clients realize value with data and AI-enable operations. What do you think about Palantir?
One issue here I have for Palantir is a lot of government contracts here. Government is going to be spending less going forward. I think, we've got Biden and maybe we keep the same administration, but they can't continue to spend the way they are. There's going to be, with the interest rates as high as they are, and they're going to have to service that, they're going to have to do some cutbacks here. There's going to be a little bit less spending. They can stop spending now. Are we going further in debt? For sure. There's no doubt about it. That path is still going to be going like crazy. But it would go even crazier if they continue the same amount of spending and have to service all this interest at these higher rates. So I think you've got to analyze it from that perspective, is that this U.S. deficit, when you're staying long-term rates going higher, is not in better shape at all. So Palantir, I've sold my Palantir. It popped up, got out, basically got my money back out of it. It's in a range here. Down to 14 has been a buy, but a lot of government contracts. I like, the getting. I think there's an AI sneaky play here. I think the AI story is ice cold, so I still think you sell them to the rips.
That's what I see on Palantir right now. I look to the right-hand side, and what does this look like? An ugly head and shoulders. You can see
plenty I never even looked at that.
Of charts
Mitch,
like this. Look at the right-hand side. And that little pop, especially on the right-hand side of the shoulder, is always how they trick the bulls in these head and shoulders.
Suckers rally.
It's a suckers rally, yeah. And you'll see it. Why? Because it's a huge wick on the top side of that. And so that's what tells us, that's what tells me, be careful. The bulls got stuffed there. They were thinking it was going to pop through 17. It looked like there was going to go through this resistance on the left-hand side, which is the left-hand shoulder, 17, 16. And then they smack it right back on you. What ends up happening? The bulls get trapped. And now the bears come in and try to knock it through the support. I'll see if it goes through 13 on the downside action. On is the next one here. Let's keep moving to Swiss Performance Sportswear brand here. They have an investor day today. So if you guys want to tune in on this and you guys feel that On is a great company, they did provide an update to guidance. They aim to double its fiscal year 23 sales by 2026, maintained full fiscal year 23 outlook, 58.5% gross profit margins. I think in this environment, that's one of the most important things that you can be telling your investors is your gross profit margins, and that you're being able to hit those margins is going to be what really gives you the appreciation in this environment.
On and on it goes. Get a pop up. This was a storied stock here. Retail is suffering. This isn't the environment to be a retail hero in. Is this the Lululemon? Is this, maybe, I've heard so many good stories about this, or is it a fad? We don't really know. You have good support at 25. I'll give you the support. Good support at 25. I just don't think we're in an environment where I want to be a hero and be buying retail stocks.
Yeah, this guy in the chat, this guy Dennis Dick said that discretionary spending will slow. I don't know what that guy's saying in the chat, but
look at me. I never been on your screen. You never show my tweets here. So yeah,
you like that one, Dennis?
Everything will slow.
But
I mean,
yeah, that's the truth. And I think one thing that we need to be thinking about is, did you guys see the move yesterday in Lulu? I've been trying to short Lulu for 2 or 3 days. I take my eye off of it one day.
It finally goes.
That's how it goes, guys. You take your eye off of it one day and look what happens. Look at that hourly candle yesterday. Chapow. And this
what
was also
happened
a little bit of a
yesterday?
fake
You
out.
got to group your stocks. The reason that I make money consistently trading isn't that I'm a technician, isn't that I'm an awesome fundamentalist. It's that I recognize relationships. What does Lulu have to do with Apple? Well, you'd say nothing. No, you're wrong. They are leaders. They are leaders. They are the generals of their industry. What they were coming for yesterday, to Joel's point, was the generals. They were coming for the generals. Lululemon is the general of retail. Apple is the general of technology. Those were the stocks getting hit yesterday. It was the generals. The XLUs, which have been severely punished, had sellers exhaustion and actually rallied. So, I mean, you started seeing separation. There was selling the weak or buying the weak and selling the strong. Lululemon, Apple, tied together here now because they are the generals. They won't always be. But right now, if you can identify that, hey, oh my goodness, they're coming for the leaders today. What's the leader of retail? Lululemon. Lululemon has its worst day in a month.
So important to know your relationships, right? Know what leads, know what lags. And this is how we always try to catch some trades. Dennis has taught me this so much. And I've added this to just about every aspect of my trading, is understanding relationship and where the money is going. Let's go ahead. Let's talk about this with our guest today. You guys out there, smash the like. Michael Hewson, Chief Market Analyst at CMC Markets. It's good to have you, Michael. How are we doing today?
Mitch. Morning, Mitch. How are you, mate? I'm good, thank you.
Doing good.
Today because the trains are on strike. Quelle surprise.
So, the trains are on strike. It seems
like
everybody's
do they want
40%
raise, Michael? Is this what it is? They want a 40% raise? Everybody wants a 40% raise.
Yeah.
I want a 40% raise. Did you get a 40% raise?
I think this is an important question, right? I've been talking about the current environment, right? And we always like to talk about how this shifts, right? Right now, the shift, I think, has gone away from focusing on inflation overall and to another side of inflation, which is the wage inflation, right? And the labor agreements that we're seeing out there. Talk to us at least what you're seeing across the pond, and also what you think about wage inflation here in the U.S.
Well, I think certainly you're seeing some signs of slowing wage inflation in the US. The ADP report this morning would appear to suggest that. They talked about declining wage growth. I'm not sure what they mean by that. I think they probably mean slowing wage growth, i.e. it's not as high as it was a year ago, but it's still growing. And it's still probably growing by more than headline CPI. And the same is true over here. Our average wage growth is 7.8%. It was pretty much unchanged from what it was the previous month, and it's likely to remain high. There's still a number of settlements that are yet to filter through into the wage growth data. And if wage growth is 7.8%, core prices here are 6.2, headline is 6.7. So we are now starting to get a rebalance back towards the worker, as opposed to seeing their disposable incomes being hit. But you can't reverse 18 months of that in the space of 2 or 3. So you're still going to get a considerable amount of wash through going through in terms of the numbers. The Bank of England mercifully has put rates on hold, and I think they're done. I really don't think it's in anyone's interest for the Bank of England to hike rates anymore. I certainly don't think it's in anyone's interests for the US to do so, but I fear that given the fiscal stimulus that we're getting from the US government, it's going to make it very much harder to get that inflation level back to the 2% target this side of 2025. And that, for me, is what you're seeing being reflected in bond markets. The yield curve is uninverting, but it still has a long way to go. You know, if you look at where we were even 2 or 3 months ago, we were negative 108, 2s, 10s. We're now negative 33. So go back to 2006. generally you had a positive effect in terms of 2s, 10s. We haven't even begun to get into positive territory. So how we get there is likely to be very important, I think, in terms of where equity markets go next. Will we get there by virtue of the fact that the 10 and the 30-year go ever higher, or will the 2-year start to slow down and fall back? And I think obviously that latter one is what we want to see. We want to see the 2-year come down relative to the 5, 10 and 30-year. Because if we don't, then I think stock markets are going to be in for a very, very, very rough ride.
How does it feel over there? Like on the street, you talk to people. Are they feeling like, well, last time you were on, you was feeling, like some people are feeling the pinch. How does it feel overall? Are people optimistic? Like they feel like we're turning this thing around, or do they feel like we're going into the Great Depression and we're all in trouble? What's the feeling over there?
The feeling over there is actually probably more positive than negative, but I think a lot of that has to do with the fact that it's been the summer. And generally when the sun's out, people tend to feel a little bit better. Energy prices are coming down, particularly natural gas prices, which is a good thing as we're heading into winter. So I certainly think that as we head into the fourth quarter, energy bills are going to be slightly more predictable. And I think that more than anything, I think helps people when they're planning for the longer term finances. I think the bigger concern is really what's happening in bond markets and mortgage rates. They've settled down a bit, and consumer confidence is slightly better than it was 2 or 3 months ago. So I think it's very easy to be very, very negative. And I don't think that helps anybody. I think sometimes you have to switch off from the mainstream media and actually speak to people around you. And that's certainly what I do, certainly around where I live, people in the office. Things probably aren't anywhere near as bad as people are painting in the mainstream media. But having said that, when the politicians say you've never had it so good, I don't believe that bull crap either.
That is true. That is true. Now, over here, mortgage demand dropping to its lowest level since 1996. Interest rates looking like they might be heading to 8%. How is the mortgage demand?
That's not going to be good for the US mortgage market. I mean, who's going to pay 8%? And if you're on a fixed rate mortgage, why would you move?
Yeah, it just doesn't make sense. That's just not logical, right? Yeah. Unless you got fired or some reason. Yeah. But other than that, I mean, you're going to be trying to stay in your house, right?
Absolutely.
And I think that this is also opening up to what's going on, at least over here. I'm seeing a bunch of oversupply by the home builders as they're pushing and pushing, trying to get as many sales in this heightened environment. Are you guys seeing that also across the pond? Are like home builders just trying to push into this?
Well, certainly if you live, I mean, I only have to look around me where I live here locally, and there's housing estates, thousands of houses going up across the board. And house builders now over here have started to actually pare back their expectations for homes, new homes built, completions, that's what we call them, completions, over the course of the next 12 months. And essentially, why wouldn't you? If you're already building a whole host of new supply, why are you going to build even more the following year when inflation is unlikely to return to target anytime in the next 2 years, and mortgage rates are near multi-year highs? You're simply not going to do that. Now, that's not to say that the housing market is going to seize up. I don't think that will happen. But ultimately, I think supply will remain constrained.
Now, of course, we've been seeing oil start to take a turn a little bit as it just recently spiked above those 90s, almost getting up there. At least WTI got hit up to 95. What do you think about oil overall, Michael? Are we going to be fighting this still up in the higher 90s, or do we go back to the range of 70s?
I think the key here is China. I think if you see a pickup in demand in China, you could see oil prices very easily hit $100 a barrel. I think, Russia, OPEC plus, they've got the global oil market over a barrel. US shale production is at a record level, and yet US crude prices have jumped over 30% since June. And your SPR is pretty much depleted. I mean, where is the extra supply going to come from unless demand suddenly gets choked off? And I think that's what I fear the most. I think over the winter, I think, if OPEC continue to keep these production cuts in place, then I think it's highly likely that we could well see consumer demand starts to tail off. Now, the US economy at the moment looks fairly resilient. I wonder what it's going to look like in the first quarter of next year, unless oil prices come down over the course of the next 2 or 3 months.
This is, something that you can clearly see is that oil is now suddenly inversely correlated with equities. Like at a certain point in time, it was positively correlated last year. It's not anymore. The oil rally started in July, and I don't think it's a coincidence that the S&P sell-off started in July as well. And this market obviously very worried about inflation. It's something they can feel directly. It's something that hurts consumer confidence when they go to the pump and they're paying 25% more. That hurts consumer confidence here.
Yeah,
so
we've
I
noticed
think
it here, Dennis. We've noticed it here. I mean, I noticed it when I filled up my car when I went on a driving holiday around Wales and Scotland. You know, instead of costing me £70, instead of costing me £50 to fill up my tank, it cost me 65. You know, that's £15 for every 400 or 500 miles extra that you're having to pay in terms of filling your car up.
Yeah, you feel that directly. So I think if oil starts to turn around and make new highs again, I think equities roll over too. So actually, as much as, we watch the TLT, we probably should be watching oil prices here too. Before we let you go here, Michael, just, this bond market, let's take it back to this. It's just, and I'm just curious, what's happening over there, because I don't look at the European bond market at all. I mean, the US, we're talking about the TLT down, 16-year lows here. It has just been devastated, the US bond market here. Is the same thing happening over in Europe? Are the bonds that weak over there? I don't pay attention to them, so I just want to get your thoughts.
No, they are. I mean, this is very much being driven by the US bond market, definitely. But I would argue that the US's economy is actually in a much better place than, say, for example, here in the UK and in Europe, I think. And I think what the ECB did last month was a huge mistake, in my view, because ultimately it's going to create this north-south divide again when it comes to servicing your debt loads. I mean, Italy's got 150% debt to GDP ratio, and they're going to have to refinance, at levels of 4.5%, 5%. Now 2 or 3 years ago, they didn't have to virtually pay anything. So, we've got a big problem over here in terms of rolling over existing debt, and the fact that ultimately we've got stagnant economy. I think the bigger concern for me is whether or not we continue to see this normalization, because it is normalization. We're back at where we were at the beginning of the decade. It's unrealistic to think that we are going to go back to the levels that we were 2 or 3 years ago. And it's how the market manages that transition as 2 years, 5 years, 10 years find their level over the course of the next 6 to 12 months. And that could dictate where we go to over the course in terms of the economy. If you go outside, people aren't that pessimistic. I think we sometimes need to take a step back as traders to what we're seeing play out in the markets. And what we're seeing play out in the markets is a little bit scary. You were talking earlier, Mitch, about Palantir and a head and shoulders. Look at the NASDAQ 100 and look at the series of lows that basically it's currently holding above. I fear what might happen there if those series of lows get away, because they essentially look like a head and shoulders, which is about to play out. And what could trigger that? 10 years, 30 years up above 5%, which is essentially where they need to be, back to where they were at the beginning of the century.
It just seems like a lot harder road, especially for the end of 23 here. And so that's what I see. Michael, is that exactly how you see it? Yeah. And that's what we're seeing. And the truth is, where's the positive going to come from, right? I don't think
not from the politicians.
Exactly. You don't expect to pivot anytime soon. I don't expect to pivot anytime soon. So this is what we'll be looking for. It's always good to have you, Michael Hewson, across the pond, Chief Market Analyst, CMC Markets. Check him out. Always good to have you, Michael. Take care.
Thanks a lot. Cheers, guys. Thank you.
Thanks, Michael.
All right, let's get back to the markets. TLT still hanging in there, right? I mean, this is the story of the day, right? Is kind of keeping your eyes on this action. Take a look at this. This says it all, right? From the morning, we've been just keep climbing. I'm just going to draw a simple trend line here just to continue to watch from the down action. As long as this line holds for me today, I think I'm going to continue to be watching what we can just bounce back. Does it mean, a climb, a rally? No, it's just more along a bounce back. And now that we got to watch to see where the next level are on the hourlies and things like this to kind of look for resistance. For me, what stands out just on the hourly charts, let's go to the hourlies, and you guys can see to the left-hand side, we have a little bit of a gap here. That's going to be our first attempted resistance. Let's see what happens around 86.50s. What are you seeing in the markets, Dennis?
I'm seeing a rally, like a sustained rally here so far on the TLT. It's really good news to see. Like we're up about $1.50 from the lows, which is not nothing. So this is good. I think we got to go back to the oil conversation here too. I don't think it's a coincidence that oil is weak here today. Oil's having a really rough day.
Yep.
I think the market's applauding that. So we've got to be, also recognizing that not only is the TLT a leader, but oil is a leader as well. It was the leader in the fact that equity starts selling off when oil starts rallying. And you know what? Oil selling off the last few days, like not yesterday, maybe. Maybe that's not the best example of yesterday because oil was a little bit weak yesterday, but holding up. But this breakdown in oil today, I think the stocks like that.
I literally was calling for it yesterday, a little bit of a bounce back on the hourly to hourly resistance. For some reason, XOM loves to do this kind of action where it gives up, comes back to the hourly resistance and starts using that as resistance. Yesterday, I was given 116.50 level. It seems like we've got a lot closer hold towards 116.20 level, but today already coming back towards that support, right? So now we'll be watching to see if 115 reject. We did get an update from OPEC this morning that we're meeting around 7. No policy change as expected. Saudi Arabia and Russia continuing their voluntary cuts, and the next meeting scheduled for November 26th. So we'll have some time before we see any changes in OPEC. Now, I think you start to see for the range type of trade, right? Where will we pull back to is something that I'll be looking for. I'm actually looking for oil shorts, right? I love this name to trend. Valero. I know that you traded PXD. You finally got rid of it.
I did.
Dennis. So
I'm all out of oil. I have no oil stocks. I think, in my opinion on oil, that oil is topped out. A few of these things I'm saying makes me want to start to nibble into some equities. I mean, TLT is starting to try to show a little bit of life. Again, if it makes new lows, you don't want to see that. But part of it, like, I think the oil rally is over for the year. So I think oil is going to break down. I think a consumer slowdown will hit oil. I mean, again, supply issues, I can't comment to, but I can comment to demand issues. And if all of a sudden the consumer's a little bit less stretched, then a few less trips, a few, like airplane rides, like I'm talking about, like going down, doing things. I mean, all that will hit demand. So I think we've got a slowdown coming, and I don't think oil is going to just continue to go up if we get a consumer slowdown.
Yeah, I think we got to be careful for quick pullbacks. Oil loves to kind of shake out either the bears here at the bottom or the bulls here at the top, right? You guys can clearly see how this chart works, right? It goes up, it comes down, it goes up, comes down. Now it looks like we're on that downturn. We'll see what happens there in oil. For me, watch to see if we can get WTI to go into lower 80s, going into the 70 handle. Oh yeah, these oil stocks will start letting go pretty quickly. Let's move on towards an interesting conversation. Uber is now offering return package shipping through UPS, FedEx, or USPS on its Uber app, of course, an Uber Eats app. This was just an interesting conversation.
So they'll come get your package for you and bring it back so you can return it type deal?
So they'll take it to FedEx. They'll take it to USPS. For a small fee. It can charge up to $5 flat fee, and they take a picture of the receipt that they go and they deliver it, and you get to track them as they go ahead and go towards the UPS. I think this is a really good use of their drivers because sometimes their drivers, let's just be honest, they're sitting around and they have such an access to these drivers that the more and more that you can do delivering, that's what you need to do. You just need to continue working that workforce. So I think this is a good situation. They already had a situation with Uber Connect that would allow you to deliver in a close range environment, like packages. Now they're working with UPS, FedEx, USPS. Why not work with Amazon also? You might be seeing that pretty soon.
I think Uber is the best run company out there. Obviously, out of Lyft, Uber, Uber's best of breed, but this company just is run really, really well. It's actually a stock I would like to own. The problem here is I think we're going to slow down, and I don't think Uber's going to. I don't think they're going to be exempt from a consumer slowdown. So people doing a little bit less, traveling a little bit less. That's going to hit Uber too. But the management's so smart here. Would this be on my shopping list? Absolutely. Stock trades only 27 times earnings here on forward basis. So, I mean, it's starting to get to like they have some growth still there, significant growth. They're finding new revenue. The debt load's not crazy. It's $9 billion. It's not fun, but it's not crazy either. The revenue growth is substantial. I mean, Uber is definitely on my shopping list. I've talked about liking this stock before. I've played it a few times here. It's just run a long ways. I would love this stock back at 35. Am I going to get it there one day? I don't know. But if we went into a really ugly period, this one would be on my shopping list. I don't want to pay 27, 28 times for stuff right now, though, because I feel like a slowdown is coming. Shopping list.
And we always got to have our shopping list, especially on downside action, because at some point this is going to be a dip to buy. The only question is where and
for
what
sure.
turns it, right? What turns it, right? We always lean towards that. Now, the level that I've been giving it is a 50% retracement for the overall market. We'll see if we can get there, right? That's going to be closer towards that 420 spot. We're right above that, and we're definitely oversold. RSI on the daily down there towards 15. And for me, historic RSI, anything below 21 on the SPY tells me that at some point I can expect a bounce coming. I don't always use it as like it needs to happen the very next day, but at some point down the line, like let's say like a week time frame, I would be looking for some kind of bounce. We'll see if we get it. What do you think about the bounce to action today, Dennis?
TLT, your lie detector test here. Let's keep an eye on it. I'm also going to be watching the USO. When I started talking about oil stocks, not watching the oil stocks themselves, because what happens, and I need to explain this to the listeners, maybe some newer ones, when the VIX starts to get elevated, and we're on an elevated list, a stock is a stock is a stock. Normally, oil stocks move completely with oil. Once the VIX starts getting over 20, they start become correlated with stocks because stocks are stocks. And you start to actually see, if you get to a VIX of 30, they'll sell oil stocks off with the SPY and not actually with oil. So right now we're still mostly oil, but just keep an eye. If oil's down, oil stocks likely to be down. But you can see some weakness yesterday in some oil stocks where you didn't see any weakness really in the USO yesterday. So just keep in mind, we're not at that market environment here yet, but I'm watching oil as an indicator, not so much oil stock. So keep the USO on your screen.
I like that outlook, and definitely we'll be catching to see what happens in the market today. We'll see if the XLU continues to go lower. Yesterday, a little bit of a bounce back into
Trying
utilities.
We have seller exhaustion and a lot of stuff here. I mean,
Yes.
It's not every week that the UXULU we already talked about goes down 10%. So you've seen consumer staples, a lot of them decimated here. Are we due for a bounce in some of that stuff? I mean, some of that stuff is typically defensive. I think so, especially if the TLT bounces. The TLT bounces, watch for that XLU to bounce even harder. So, I mean, because there's always been a positive correlation between TLT and XLU because they trade like bonds. So, I mean, you start seeing the bonds bounce. That's really good news for XLU. It was good news that we bounced a bit on the XLU yesterday. We'll keep an eye on this market here. Guilty until proven innocent, but have your shopping list. I mean, I don't think we're going into, I do think we're going to have a hard landing, but I don't think we're going into end of times here unless we start getting regional banking failures, and that's going to take, a whole another, and that is a concern. So I think, some cash is prudent, but have your shopping list. If you get a company at a decent valuation that you like long term, you're putting something away for 5 to 10 years here. Like I said, I think if you're putting the TLT away for 10 years here, I think you'll be happy. If you're putting it for 10 days, I'm not sure you're going to be happy because we're definitely catching the falling knife.
I think that's important to kind of keep an eye out for. And also, I think it's going to be a very stock pickers environment for the rest of the year, right? You're going to have to pick good companies. It's no longer, I think, just look for any growth out there too, because there was a second there that you saw a lot of ARKK stocks just ripping to the moon and starting to push back. Now, where do you see those companies going? Just take a look at like a Roku, right? Look at this chart. This chart says it all. Look at that daily chart. These stocks were popping. Now they're dropping like a rock. I think we need to be very careful
Holy
which
Roku, I
ones
haven't
we're
looked at it for a while.
grabbing. Look at Unity. This one
Oh,
started
I'm long
popping
Unity.
back.
I've looked at that one. That one's hitting me. That's the one that I got that I wish I didn't have.
Yeah,
Yeah.
28 doesn't really seem like it can hold here. I don't think it. I mean, it's right back to it. 26, 28. Will that be able to hold here for Unity? And that's why I'm keeping an eye on maybe even taking a at least long at kind of like hedge style trade with SARK. Some things like this is just what I'm thinking about. You guys can catch this kind of action, this kind of talk.
See, I would just
live
short
trading.
ARK if I didn't, and we obviously, a lot of people like to trade the SARK because they maybe can't short stocks. Maybe at Robinhood you can't short stocks, and it's your way of playing the other side. So I understand why the vehicle exists, but I mean, I don't understand these Teslas. TSLL is the 1.5%
right?
bull Tesla. And then you have TSL. There's another one, TSS. I don't know what they're coming out with these all the time. There's a 1.75 times. What's the 1.75 times on Tesla? Like, why are we allowing these vehicles to be created? I get SARK because it's allowing people, it's a purpose. It allows people at Robinhood who can't short stocks, who don't have a margin account, to bet on the other side. So I get that. I don't understand for the life of me, why would we ever create a vehicle of 1.5 times Tesla? Just if you're buying 100 shares, you buy 150 shares. It makes absolutely no sense. And I don't know why regulators are allowing these vehicles to be created. It makes no sense that TSLL, and I'm sorry to Direxion, because they're obviously have created this and they're finding different ways to make money. It makes absolutely no sense that TSLL exists. If you want to buy Tesla, simply go buy 150 shares if you're buying 100. Or if you're buying one share, then I guess, then you can't buy 1.5 shares. But you can do that at Robinhood, I think, too. They were doing partial shares. So it's just stupid. Dumb vehicles. That's where we're getting into trouble creating all this stuff. But there's now I noticed, and I don't know what it is. Maybe the chat knows. There's a 1.75 times on Tesla. 1.75 times.
TSLQ, maybe that one. I don't know.
Is that what it is?
But I'll tell you one thing.
One. There's like a million of these. It's ridiculous. Why are we creating we're gonna have a 1.66 times? All this is money grab for the issuers. I mean, this is just
said it best right there.
Retail money. It's absolutely ridiculous that we create these vehicles. SARK, we're fine with because it allows you to bet. I get, the inverse because it allows Robinhood to bet.
And it's multiple stocks, right? Multiple stocks. Yeah. That's what I would say why SARK is a little bit better. But
there's GOGL or GO, I don't even know, GOO. There's Google, and then there's a Google that's 1.5 times, and there's probably a Google that's 2 times. TSLR, thank you very much. Trade Mix, thank you very much. TSLR is the 1.75 times long Tesla. It's like 7-minute abs, 6-minute abs, 5-minute abs. I mean, come on. Regulators, I know you guys listen to this show. Regulators, stop the insanity. Guys. Don't allow these vehicles to be created. They're absolutely stupid.
And what I like to say is that truly, let's keep things simple, right? ETFs are ETFs. They should be a combined vehicle where multiple stocks are coming together. When we start doing ETFs of one stock, is that truly an ETF? That's not what they were made for. At least that's not from my understanding of finance. I know, Dennis, you studied
about this,
the CFA, and you studied how ETFs were probably intended to be. This is not the intention. So that's what I would say. Hey, that's what you guys get from today's pre-market prep. We had a great show for you guys. Do us the favor, guys. Hit that like button. We're not getting enough likes. You guys want to keep pre-market prep on? Well, this is how you guys show us the feedback. We don't require payment, but we do require some feedback. And that's just the thumbs up or thumbs down. And I'm always in agreement. I'm not telling you have to do thumbs up. I just want your feedback. So hit those thumbs. Let us know what you guys think and hit the comments after. What do you guys like on pre-market prep? And what do you guys not like on pre-market prep? We're not going to get mad. We want the show to get better. So you guys give that feedback down in the comments below. Hit the like button. It's always good to have you, Dennis. We'll see you tomorrow. And guess what, guys? You guys won't have myself or Joel tomorrow and Thursday and Friday. You guys are going to be having the one, the only AB.
There he is.
What up, Money Mitch? How we doing?
It's good to see you,
Aaron?
my man. AB, I had to pull you on. You're ready to go, bright and early. My man's ready. He's tuning in, so don't miss my man AB tomorrow.
Me and Aaron are gonna rock it tomorrow. I've done Aaron's a show a few times with Aaron. Aaron does a great job. So AB's gonna be here with me. Triple D and AB gonna rock it out here Thursday and Friday. Let's go, AB.
Let's do it. It's going to be a good time. Great show, guys, today. Love tuning in.
Hey, always great to have you, AB. That's going to do it for us today on Pre-Market Prep. You guys stick around. We got live trading coming up next. Don't go anywhere.